Built on top of smart contract-enabled blockchains like Ethereum and current dApps, they function to complete objectives of disintermediating government are the Constitutional Convention, sovereign state accounts, PMAs, and the QUORUM voting protocol.
We want to use the blockchain to change society, to disintermediate government. We're not focusing on how much money we're going to make. We're looking at, will this benefit society?
Project override.
The beginning.
Project Override.
Yeah, episode 10.
Yeah, so we're going to get into blockchain and distributed ledger. And we're not going to get into like crazy specifics. So if you want an in-depth look into blockchain and distributed ledger technology, there's plenty of videos out there with people who are much more well-versed in blockchain than us. Mm-hmm. This episode, because we've said, hey, let's use QUORUM and Verus, this episode is more about a competitive analysis. So we're just going to get right into it. And with that in mind, what is blockchain and distributed ledger?
All right. Distributed ledger technology refers to a type of database that is spread across a network of computers rather than being stored in a central location. The most well-known example of DLT is the blockchain, which is the technology that underlies cryptocurrencies like Bitcoin. In a distributed ledger, each participant in the network has a copy of the database, and the data is synchronized across all copies in real time. This allows for a decentralized and transparent system where every participant can view and validate data.
Right on. So yeah, a glorified spreadsheet.
Yeah.
We're moving from centralized systems to decentralized systems, and some of these systems have totally transparent ledger. And the most popular use case so far is the original Bitcoin. And now there are over 15,000 different types of cryptocurrencies and several different base layer blockchains. So let's just get into a little bit more specific here.
Right on, yeah. So blockchain has many uses, including finance, supply chain, real estate, voting systems, and more. Some of the key points is it's decentralized, immutable, secure, and transparent. They can be public, meaning that anyone can join a network and validate transactions. They can also be permissionless or private, meaning that access to the network is restricted to a certain group of participants. So why is all this stuff important?
Well, it's super important because when Bitcoin and all these things were first put out, it had a kind of ethos of be your own bank and taking out a corrupt middleman, disintermediating bankers, the banking club. You need this huge amount of money to participate in their networks. So blockchain in its original popular kind of Renaissance type of marketing pitch, it was all about censorship resistance and opening up financial participation in areas where you couldn't before. And there was a low barrier to entry, so anybody, no matter your net worth, what country you live in, you could and can participate in blockchain. And we're going to show how that's kind of decreased over time from its original vision. Mm-hmm. But of course, the decentralizedness secures the networks. The immutable factor is that since all of the data is decentralized across many computers, that ledger is secured by all of the different nodes on the network to make sure that no ledger is forking off and deleting or altering data. And then, of course, as we said, the transparency we have, whether it's open source or the ledger itself cryptographically, is visible to everyone. And there's different types of blockchains and how they're secured. Proof of work, POW, or proof of stake, POS, and there's different types of proof of stake, like delegated proof of stake. But the main point is the original pitch, censorship resistance, and opening up participation in the network to everyone. With the financial aspect, which Bitcoin and all these other cryptos, financial instruments, they're on how do we contend and compete with MasterCard, Visa, And so transactions per second, TPS, is an important pitch, just in terms of how much data, how many transactions can happen in one 24-hour period. Mm-hmm. All right, moving forward.
All right, so now we've come to one of our favorite subjects. It's the Decentralized Autonomous Organization. A DAO is an organization that is run through smart contracts on a blockchain network, rather than through traditional management structure. This allows for a more decentralized and autonomous system of decision-making and governance. DAOs have the potential to change society by enabling new forms of decentralized governance and decision-making, voting systems, community-run organizations that are not controlled by any single individual or group, and new forms of economic activity, such as decentralized finance and token-based crowdfunding, can all be done through a DAO. You can also vote on proposals, cooperate accordingly. Vote on proposals cooperating according to a self-enforcing open source protocol.
Great.
So what does it all mean?
What does it all mean? So the evolution from Bitcoin to Ethereum brought in this concept of a DAO. Yeah. And so where traditional entities are managed by different levels of administration, those administrators can be replaced by code. And the ethos there is code is law. And so Ethereum put forward the concept of smart contracts. So whether it's having money held in escrow and released under certain conditions, that mechanism there is replaced by a smart contract. And so if there's a change in emotion by a human party, centralize a point of failure, trusting a human, that can be replaced with code. So that's where we have trustless systems, that term comes from. All right, so that's the basics for a DAO. Crowdfunding is an important one, and we see networks like Indiegogo and those other big popular ones that allow crowdfunding, but that can also be done through Ethereum. Most of the tokens that are out there in cryptos were all done through Ethereum.
Yeah. And then we're going to connect this into something that we've touched on a few times, but that's the Constitution. So why might you want a Constitution backing a dollar, or what role does the Constitution play? So I think this is going to be interesting for a lot of you. So a Constitution is a limitation on the government, not on private individuals. That it does not prescribe the conduct of private individuals, only the conduct of the government. That it is not a charter for government power, but a contract of the people's protection against the government. Which is brings up an interesting point about why they may have suspended certain things at certain times, you know?
Seemingly suspended the Constitution during COVID,
Yeah.
So this is important because we mentioned in the last episode, we're going to talk about the Constitutional Committee and Constitutional Convention, and this is really the main aspect of a DAO, and the functionality a DAO provides is the voting mechanism. So if we're talking about direct democracy, or what Project Override is really seeking to do, which is disintermediating government from the corrupt political figures that are currently in office, if the people were to take back control, what would that look like? Now, in Canada, it's a very special case. You can reference Doug Force's work on The Myth is Canada regarding Canada's current state and its more technical analysis of how bills and acts were assented to and whether there is something that wasn't actually done properly. In Canada here, it's very special because all of the provinces are sovereign. So constitutional committees and a constitutional convention would be important because we could take all of the provinces that are sovereign and basically create a new union and actually have a constitution that's signed off by all the provinces.
That'd be very cool.
That would be really cool. So we would need a committee to do that. So let's. This is taken from The Myth is Canada as well.
Yeah, so the purpose of this committee is to organize delegates to represent the community at a constitutional convention. Also, the committee would compile a package for the delegates. This package will include what form of government via the type of government structure created in a constitution, an outline of a Bill of Rights, what courts and jurisdictions of the courts will be structured within a constitution, and other causes to be included. The committee would have to communicate with other communities and their committees, sharing information on the different processes. Delegates would have to be trusted members of your community, and how you voted or got them into office, so to speak, would be up to each community, so you could vary how each local sort of delegation or constitutional committee was run.
Yeah.
Yeah.
So we're just pointing this out, that with the current technology that's out there on how DAOs are run, we could easily, if everybody agreed, this is how we're going to do it, and this is the platform we're going to do it on, we could have a constitutional convention and revitalize a de jure government in Canada. So that being said, let's move forward. Talk about building on blockchain infrastructure. So actually having a utility that's useful to the everyday person, that would be referred to as a decentralized application.
Yeah, it's kind of fun, this stuff. So it's you built it on top of a smart contract-enabled blockchain, such as Ethereum, current dApps that can function to complete objectives of disintermediating government would be a constitutional convention, sovereign state counts, PMAs, quorum voting protocol. We're just going to break each of those down for you real quick. So let's start. We just sort of mentioned the constitutional committees, sovereign state counts.
Yeah, so sovereign state counts was a year ago, and I pitched the idea of having a point of sale machine that would be splitting off consumer tax into a separate community controlled account. And then every month, citizens within, say, a province or a city could then vote on how those tax dollars are spent. When this idea was first pitched with the idea of consumer tax on each of your purchases, we ran into a bit of problem because most people's books, businesses, they do write-offs, and so this is a little bit problematic if you're collecting tax and then basically asking those businesses to do something different. So change the concept from sovereign state counts collecting consumer tax to collecting property tax. So we're just leveraging the fact that every year people have to pay their property tax. And if we introduced a DAO or a different kind of smart contract into the equation, we could first send that property tax to a different party, some code that is recognized by the people are deciding to do this. And so that money is held, and then everybody votes, hey, I want 30% of my tax to go to education, 40% to go to the roads, so on and so forth. And I think over time, everything would balance itself out. That's just a hypothesis. But a new concept, and property tax would be each citizen rather than changing how businesses do their books. Mm-hmm. Private Members Association, we'll talk about a bit more, but that's really when we were talking about the Constitution dollar and local gold and silver backed cryptocurrencies, local cryptocurrencies, that we could form a Private Members Association and have a contract, a private contract, that every member agrees on. But really, the dApp, the Decentralized Application, would be taking these private contracts and converting them into NFTs, and that would represent your voting rights in, say, a decentralized autonomous organization. So rather than using a PMA structure, a DAO structure, or blending the two together. And finally, QUORUM. We did an episode on the QUORUM voting protocol, a continuous voting mechanism. And we are combining this protocol with the DAS, so a decentralized autonomous zone. So really, we're just talking about an area, a locale, where people are doing direct democracy and they're voting on issues of importance in their locale.
Exactly.
So that's what Project Override, in a quick summary, like what we're trying to build.
Yeah.
But we're just pointing out with this competitive analysis, whether we want to build this sort of stuff, we could do it on Ethereum, Polygon, Avalanche, Polkadot, Cosmos, Cardano, Phantom, Synthetics, and all the other ones that I didn't mention that people are emotionally tied to because they're speculating that's going to be the winning team, which is totally fine. But Ethereum's been around the longest, so Aragon is one of the first dApps, decentralized applications, that were able to host these DAOs. And so really the functionality we're looking at are multi-signature, so a minimum amount of people to sign off on a transaction. Okay, we collected all this property tax, we need at least 12 people on the board that's running that to say, yep, okay, time to release those funds. Or we could do time locking funds. So with QUORUM, it's running on a 45-day voting period, 2 21 voting day periods, and a 3-day rescission period. And so technically speaking, if votes are put in and then a tally is released at the end of a period, it's the same as funds. So it's time locked and then released at a certain time. Of course, voting, that's DAOs are used for. And then Aragon also put forward dispute resolution protocol, which is really replacing courts if you got to that that level of how this technology has evolved, and we're not there yet. And then, of course, NFTs, and we mentioned NFTs being in how we're wanting to use them, not as digital artwork that's traded and people are speculating on NFTs. We're talking about NFTs as a contract that's on paper, scanned into a PDF, and then this scanned PDF is put on the blockchain connected to whether it's a self-sovereign ID, which would be like a supercharged NFT, or it's just this non-fungible token. It's individual. Okay, so on to the next.
Yeah. And now one cool thing just about with what we were just talking about, it's showing you that the ideas we're pitching are already possible, right? We're not pitching that this technology has to be invented. It exists currently, but what we are pitching is that maybe there's a more ethical way or whatever to build it.
Yeah, right? We're considering how everything's evolving, and whether or not we're going to put all our eggs in one basket and choose one platform. And of course, full disclosure, we've kind of decided Quartal and Verus is the way to go, but these are our considerations looking at these other systems.
Yeah. So now we're going to get the DAO with the DAs, dude. So province with states and DAOs verifying individuals with the DAs. So that's verifying location for operating quorum voting protocol. Why is that important?
Okay, so yeah, each province or like a state in the United States of America could technically have their own DAO, or the country could have their own DAO, and citizens aren't relying on their political representatives to vote on. We're just strictly using a DAO to vote. Fine, that would be great. Totally possible if everybody was on board. The concept Project Override is pitching here is that a decentralized autonomous zone, and we're using a specific location protocol to make that happen, but we were considering how does a citizen verify that they have a vested interest in a certain area. So if we're saying you need to verify you live in the province of British Columbia, well, how do we do that? So the DAS, the Decentralized Autonomous Zone, is strictly call it like a town hall or a city hall, an area somewhere in a city or somewhere in a province people go to at a certain time period to verify, I just checked into this location, I do in fact live here. And there's different ways to go about that we explained in the QUORUM episode. But yes, so the DAS can be used to verify location, and then the DAO operates off the DAS to push forward and disintermediate government and bureaucracy. Yeah.
All right, so resources, local member-backed cryptocurrencies managed through the DAO Community Resource Management.
Right, so this was originally referred to as the co-creatrix many years ago that evolved from my original project called Who Talk. But really the premise here was people in your community somewhere like on a blockchain could, hey everyone, I have these resources I can provide, I have these items that I can lend out, I have these certain offerings, I have time, I can listen to people or give community service somewhere, or hey, I really need help, I need someone to talk to, but it's localized, and of course this can be already done through Kijiji or Craigslist or any other online forum, but matching and basically having a ledger where everybody participating here is verified in one way or another, privately, of course. We don't want to expose any private information. Mm-hmm. And then we did touch on private member associations, and we're referring to local gold and silver shops coming into a private agreement with their customers, private agreement between each gold and silver shop. And that could easily be a DAO. And the private contracts, as we said before, are represented by NFTs. And we want the information for each private individual to be private. So that's where the technology zero knowledge proofs come into play. And then one huge consideration, because to some, blockchain means a World Economic Forum's centralized control over everybody, CBDC being able to shut off people's money, and locking your whole life to a digital ID that can be turned off at any point, like in...
The elephant in the room, really?
Yeah, the social credit system China's got going on.
Yeah.
So it's really a digital ID versus a self-sovereign ID. We can just say, hey, F off everybody, I don't need to use anything digital, go into the bushes. Always an option. But children referred to as digital natives are growing up with this technology. And so who's looking out for their best interests? What technology can we use as an alternative to digital IDs that can be centralized control? So that's where self-sovereign ID comes from, the concept comes from. We can look at it in terms of, like, if you're using a free service like Facebook has their own centralized ledger database where you're doing all your actions, your behavior is recorded, and that data is sold to a data broker. And I think the article I looked at, if you were to actually get paid out for having your data on Facebook, you'd be paid like $1,200 a year. So if we rearranged our relationship, whether it's with government or with a social media provider, essentially we could have a self-sovereign ID and turn the table. And we could actually be making money off of selling our data for certain things, like being advertised to for services that we're actually opting into, that we have an interest in, which is beneficial. Yeah. And Ethereum, as we're talking about what currently exists, I believe they have this concept called a Soulbound token, which acts as an NFT that it will always stick with your identity. So I believe that comes from the World of Warcraft. Leveling up and getting to a certain level of achievement, you're then awarded, it could be awarded a token, but you can't sell that token. So it would be a non-fungible token that's attached to your identity. So cool, like gaming terminology, soulbound. But if we look at the word and the terminology on its face,
it raises questions for me.
Yeah. I don't know if I want my soul
I'm not sold
down to a blockchain. It's pretty nefarious sounding.
Yeah.
And we're not going to shy away from pointing out these things. But we're not going to, stoke everybody's fear either. We're just being straightforward and upfront. This is what we're seeing.
Yeah. It's a good conversation to have. So.
All right.
So now we get into a bit more of a personal experience. So what protocol to build your DAS upon?
Right. So right up front, I'm wearing some merch for foam because you've seen in one of our videos that we were building these radios to create
That wasn't us.
Right, that was.
What are you talking about?
That was the fictional version of us.
Yeah.
Yeah. So again, the project in Project Override is within square brackets, which represents the fictional world. It's just the projection, right? The override we're applying to the real world. So we're really just doing an override here.
Mm-hmm.
When I chose foam, I actually, in 2018, because I got into blockchain in 2017, when I saw location protocol blockchains popping up, I was like, whoa, this is the answer. And I was really stoked. So I found all the competitors. At that time, it was XYO, a company out of California, Platin, a company out of Israel, and Foam, a company out of New York. And so I put $500 on each of those companies in their initial coin offerings, their ICOs. And, I was fully aware that it was a token sale. I was gambling, so to say. I was speculating. I could lose my money. When I put $500 into Platin, they made very clear that their software was not open source. So I put a risk on putting my money in there. And I actually participated in their platform and tested their dApp in taking my location data and seeing how they could progress their technology. Unfortunately, I followed up with the CEO of that company in Israel, and he stated that they were going to move to EOS to push their tech forward. And unfortunately, he never followed through on what he promised, and so I lost my money. I lost my investment, and the tokens I got for participating in their platform are worthless. So I inferred just by how COVID started and how they were doing contact tracing. I basically, without any proof, I'm just speculating, that Platin sold out of Israel, sold their technology to governments around the world or mega corporation to introduce contact tracing. Just a speculation, I'm not too sure. So that leaves XYO and Foam. As California is like hype marketing, XYO got on to a great start and got a big crowd with their marketing. And so they're more about like point of origin and real world data. And Foam, proof of location, making presence claims. And so this is how I assessed. I really just, I was aware I could lose my money, put my money down, invested in the future of technology, willing to lose that money. And so now we're with XYO and Foam. So because Foam was gracious enough to offer out their radios and get their zones set up, their zone anchors. That's where we're at right now. So using that as an example, there's so many options on blockchains. Many people are invested financially. They have an end goal of making money, buying tokens at a low price, selling them at a high price. Nothing wrong with that. But we're really looking at, in this specific example, and Verus and Cordal, we're looking at it. We're not in it for the money. We're strictly looking at it as, hey, we want to disintermediate government. We want a different world for our kids.
Yeah.
Most definitely, yeah.
Yeah.
And then the regulations, because it's a slow burn here, regulations for DAOs. In Wyoming, I believe they recognize under their law DAOs and the laws concerning DAOs. And XRP is the most famous one that's still up in the air whether or not it's going to be considered a security or not. Ethereum was in Ethereum 1.0 considered not to be considered a security. Ethereum 2.0, I'm not entirely sure about that at this point, whether they changed their mind. So yeah, the regulations, if they're in a gray area, big investors will hold off and wait until that's ironed out. Mm-hmm. And then the other thing to consider when investing in different protocols, different base layer blockchains, how that initial blockchain funded itself, whether it was an ICO where people bought, were there big investors, big whales who got a super low discount on those tokens, what percentage of those were bought by big investors, because the disadvantage for the everyday consumer who came in later is that once that popularity rises, those big whales, those big investors that got in before everybody else, they liquidate and they sell, and the price drops for everybody else. Of course, it's just markets and how the markets work. But yes, with Platin, I don't know if I could call them a scam or a rug pull. They just kind of went quiet and shut down. But a lot of the time, you can get some meme token or something, and they sell a bunch of tokens, and then the project goes nowhere.
Yeah.
So those are the considerations.
Yeah, so back to some of the stuff we've talked about before, gold and silver cryptocurrencies. We'll touch a bit on some of those, but why don't we start with the one that you have experience with?
Right. So when we pitched the gold and silver local cryptocurrency, I at first was considering using Veritaseum, but I'm not too sure that's still the route to go. And that's why we're pitching in the last episode, like how to do it with Verus. But I had my experience in 2018 on the Veritaseum dApp, their VeAssets. They had gold, silver, palladium. You could buy kilograms, ounces, and gram denominations. So I actually had bought an ounce of gold with Ethereum, and then I wanted to redeem it. I wanted to prove to myself that that company was legitimate and they honored what they were offering. So I redeemed my gold ounce and sent it off to the party that I wanted to send it to, and that party informed me that they received that ounce. So it was redeemed. These other ones, there's a few more than what are listed on the screen, but the most notable gold-backed crypto is TetherGold, and they're popular because of Tether USDT. Their US dollar is tethered to one USDT token that's on the Ethereum network. And their history, their audits of the amounts of US dollars in their bank accounts, accurately representing what's on the blockchain. Those audits haven't been quite successful, and they say that they are backing their dollars one-to-one. So based on that history and some very odd things like the FBI having accounts at Tether, and the FBI can phone up Tether, the company, at any time and freeze certain USDT tokens, whether they're hackers stealing USDT or whatever. That's censorship even in that case. But it goes to show about Tether. Paxos I have no experience with, but both Tether, Paxos, and Perth Mint, their one token represents 1 troy ounce. And then there's Lode. I believe their website is lode.one. And so they're 1-to-1 gold and silver grams. And they do have another type of token as well. But all of these, I believe, even Veritaseum, so their gold is in a vault, verified in a vault, audited, of course, and then there's an insurance policy. So that's also very important. That about does it.
I think that covers it. I mean, one final point is this: what we are pitching though is more of a local reserve versus like a North American reserve, in terms of where you're storing your gold and verifying it.
Yes.
Right.
So all these,
one of the main differences.
All these big ones are like you're trusting a big corporation. So that's your centralized point of failure. In our system, as we stated, our centralized point of failure is trusting the local gold and silver shops. Mm-hmm. We're introducing an element of trust. It can equally be said that with TetherGold or these other companies, the centralized point of failure is the entity itself. Mm-hmm. The question is, how what is the minimum amount of gold or silver tokens you can redeem at once? So I forget which one of these. It's like you have to at least redeem 100 ounces of gold, right? And for the everyday average user, that's not very accessible. With Veritaseum, I was able to redeem an ounce. That was great. I was an everyday consumer, so success there. So let's move forward on to the next.
All right. Something that's going to be central to all this, as well as uncensorable websites. So you have 3 up there: Ethereum domain service, unstoppable domains, Namecoin. They all operate off of a decentralized storage. We'll speak a little bit of each of those.
Right. So our website override.solutions is also hosted on Ethereum domain service. So I bought the ENS domain projectoverride.eth, and within that address, I can tie different cryptocurrency addresses if you wanted to donate. I can also, if I wanted to sell that domain name, the disadvantage compared to the other platforms we're looking at is you have to pay like a yearly renewal fee, just like GoDaddy or these other domain service providers. And it's great that you can trade it on a decentralized marketplace. Unstoppable Domains is, of course, a corporation that they had .crypto domains. So Project Override, I bought projectoverride.crypto, and the Brave browser supports putting in that address. So that was a one-time cost, no yearly renewal fees, and it's not just on Ethereum, it's also transferable to Polygon, and as I mentioned, that's a centralized entity corporation. Namecoin is kind of like the original uncensorable website, and they use .bit addresses. And so this was launched in 2013. They're like an original fork of Bitcoin. And all of these replicate HTTPS, which if you ever were typing in a website address in your browser, you hit enter and you see that little lock. That means it's HTTPS. So the domain name server serving up the website, if you don't have HTTPS, it could be considered unsecured. And if you were ever entering in personal information or doing banking, you have you're kind of open to being attacked and having your personal information stolen. So DNS redirects is how that happens. Namecoin, when I looked into it, it looks like they also had, if you're buying a domain, you're going to have to renew that every year. So with Verus and Quordle, it's just like Unstoppable. It's just a one-time purchase cost. And that's another reason why we chose that. And so when you're hosting, say you're uploading an uncensorable website and having it accessible through Ethereum, whether it's Unstoppable Domains, Ethereum, the files, like the images, have to be hosted somewhere. So the cloud, right? So in crypto, we have decentralized storage, so a decentralized cloud. Interplanetary File System Protocol manages those files. And so some popular ones out there are Filecoin, Storage, Holo, Siacoin, Arweave, etc. So that's where you get your uncensorable from. It's always going to exist on the blockchain, so it can't be stopped. But if there's really nasty stuff that no one wants to see, if someone's hosting a website and they're using, say, Ethereum name service or a different company to bring in images on IPFS, they can choose to not allow access to see that website, but that doesn't mean that it's inaccessible. You can still access it. So that's where you get your uncensorable from.
I'm just popping in here to add 3 additional competitors to the uncensorable website space. The first one is Handshake Protocol. The Handshake Protocol aims to provide a decentralized alternative to the traditional domain name system. It's a decentralized naming system that aims to create an alternative to this traditional domain name system, DNS, used to resolve human-readable domain names to IP addresses. The Handshake protocol is based on a blockchain and allows anyone to register top-level domains and subdomains by bidding on them using the Handshake cryptocurrency. Their website states that you outright own the Handshake domain, but every 2 years there is a mining fee of 0.1 HNS, or Handshake token, to renew that top-level domain name they own. There's around 2 billion Handshake tokens, and 66.6% of those tokens were pre-mined, meaning they were given out to early creators, investors, sponsors, and open source developers. 680 million, or 33.3%, is left for mining on the Proof of Work blockchain. You can buy Handshake domains and HNS tokens through Namebase. The Stacks blockchain is a decentralized network built on top of the Bitcoin blockchain. It enables smart contracts and decentralized applications, or dApps, that can be built on top of Bitcoin. Some things that Stacks can do is Bitcoin NFTs, Bitcoin DeFi, and Bitcoin Name Service, otherwise known as BNS. Just like the others, you can buy your own .btc domain. It costs 2 STX tokens and renews every 5 years. So, you don't really own it outright. Just like Ethereum Name Service, you can receive Bitcoin to your .btc domain and have a website connected. As much as these are all similar, that they offer a unique namespace to replace a string of letters and numbers so you can receive crypto and resolve that namespace to IP addresses, they all lead to digital ID. But we must make a point about the difference between digital ID and self-sovereign ID. The third competitor is Polygon ID, which is another contender in the self-sovereign identity space, letting users prove their identity without the need to expose their private information. The identity is secured by zero-knowledge proofs, or otherwise known as ZK snarks, and the user is the only custodian of their private keys, and the user controls their own data and can share it with third parties without that third party knowing about the verified credential. For example, I can prove that I am the age of majority without handing over my driver's license or exposing who I am. VerusIDs were actually the first implementation of a self-sovereign ID using zero-knowledge proofs, although Polygon claims they were the first on February 27th, 2023. Veruscoin did this over 3 years ago, proven with a snapshot of their blockchain. And now on to the next subject.
On to the next.
Yeah. Alright, we're just going to quickly cover some of the hacks, scams, bankruptcies, and hidden agendas that have happened over the last few years. Do you want to just blaze through that? Tell us a bit about a couple of those?
As fast as possible, yeah.
As fast as possible. Get it out of the way.
Get out of the way. So this is what scares most people away from using cryptocurrency and blockchain, because we're just seeing one after another, just people getting wrecked. Mm-hmm. People losing their life savings. Like, it really sucks. Like, yeah, get into crypto. Oh, yeah, I'd love to lose money. It happens as this technology is progressing. That's just the way it is. So MTGOX was the first big hack in crypto, one of the original Bitcoin exchanges in 2014. It was hacked and almost 1 million Bitcoins lost. And so the participants in that original hack that lost money, they were able to either request their Bitcoin back from the ones they could recover or get money back. And so the people that requested their Bitcoins back this year in 2023, those people will be getting their Bitcoin back. So that's just a heads up for a bunch of Bitcoin hitting the open market at some point this year. Mm-hmm. The next big hack, as we're speaking strictly about, mostly about Ethereum here, the DAO hack. So when they did their initial coin offering, they raised over $100 million in USD, and 60 million of it was hacked right away. So their ethos, like immutable ledger and like you're not supposed to roll back the blockchain. They had to make a decision with Ethereum, and they had to roll back the blockchain and reverse those transactions. So it's called a hard fork. So because that happened, that's why we have Ethereum and Ethereum Classic. Ethereum Classic chose to keep going with the record of the hack there, and Ethereum from the hard fork chose to reimburse everybody and continue with that on their history, that they did in fact reverse that. Next, BitConnect is one of the big famous like multi-level marketing schemes, Ponzi schemes, and a lot of people lost their life savings in that. And it's a bit of a rug pull. And then there's these other things like fake airdrops. Basically, it's bait. You think you're getting a token that has value. Next thing you know, you're kind of pulled into a scenario where you're putting more money somewhere to try and redeem those, and you end up losing money. And then MEV bots. These are bots that are kind of front running on decentralized exchanges. And personally, I've had that happen a few times. I had a few $100s I was trading on Ethereum. I think I was using Uniswap. I saw a low price for a token I wanted to buy, and so I hit execute on that transaction, and all of a sudden, transaction failed. And so I was like pretty shocked, because what ended up happening, because of how Ethereum is built, the more gas fees you pay, you gotta get your transaction request get pushed to the front of the line. So these MEV bots are kind of, their algorithm basically can see someone making a transaction and then get ahead of them. And because that happened to me, my transaction failed, and I ended up losing $90. So not only did I not be able to execute my trade and get the other token I was exchanging it for, I also lost money. And so that was very unfortunate, and didn't make me like Ethereum too much on that day. Bridge hacks. So a bridge is considered the interoperability between different blockchains. Because there's interoperability, different blockchain infrastructures have different smart contracts and how they are built. You get more layers of security issues. So Binance Token Hub, Wormhole from Solana, Ronin, those were all big, and hundreds of millions of dollars lost just by experimenting with interoperability. Next is Luna, the Luna collapse, and that was based on the stablecoin UST losing its peg to the dollar. And I think that was like a programmatically peg for the stablecoin. And so those users suffered a 98% loss, whether it was on Luna or USD. And then, of course, the most famous one that happened in 2022, FTX, with Sam Bankman-Fried. Oh, I just, I made a bit of an accounting error. Putting the blame on Alameda, commingling funds, and trying to weasel his way out of his responsibility. So we still don't know. We don't know what penalties he will face personally, but he's, he's not in prison right now. He's tucked away somewhere in a house playing his League of Legends, which is, it is what it is. And of course, there's the ties to government officials, which make it very suspect whether or not the FTX crash was a false flag of some sort to order out of chaos to bring in a solution with regulations. And the unfortunate part with FTX falling, with tons of people losing their life savings and lots of money, bankruptcy domino effects. So Three Arrows Capital, Celsius, Genesis, and then Voyager, digital currency group Grayscale. I don't know if they're considered bankrupt yet, but we will find out soon. And then there was a bit of kind of fear being put out on social media regarding minimum deposits onto exchanges, but it was specifically with Binance. They had one financial service provider that said, we'll only allow you to deposit money onto Binance if it's at minimum 100K. So that was specific only to the one financial service provider on Binance, the exchange. But that's just back to like the big boys club with to participate in the banking system, you need to have at least this amount of money. So cutting out the average user, that could happen going forward. We're not too sure. So that's why it's important to choose the blockchains that have a good ethos. And then Tornado Cash, that's specifically a cryptocurrency mixer where you're obfuscating where your original crypto is coming from. So you have a transaction, you send, say, a few ETH or a few cryptos into a pool. They all get mixed up, swapped out. It obfuscates where it's coming from, and then it kind of spits it out into various accounts. So you can't track where it's coming from. So this is good for, like, I guess, people who want to have privacy with where their money is going, but also it can be considered money laundering. So when this happened with Tornado Cash in 2022, they estimated it was $7 billion worth of crypto was laundered, and that led to regulations.
Mm-hmm. Which is always a good thing, right? Yeah. So it's called OFAC Compliance, what he's talking about there. So it stands for the Office of Foreign Assets Control, and it's an entity that's now in charge of enforcing United States economic sanctions. So the real concern is kind of that under hard censorship scenario, nodes would be forced by regulation to basically discard any blocks with any of these transactions in them. So what does that mean?
Right, so the tweet there is like, ETH is quite literally an arm's length away from becoming 100% owned by OFAC. Being regulated, validators censoring transaction can decide to no longer build on non-OFAC compliant blocks. The longest valid chain would no longer be censorship resistant. So they're saying ETH equals OFAC coin, and it's a bit true, a bit not true. So essentially, to participate in the network, if you want to mine Ethereum or proof of stake now, ETH 2.0 is merging into. Basically, they're saying, like, if you're going to be participating in this network to secure it and earning Ethereum, well, you got to make sure your node doesn't process transactions coming from Tornado Cash. So that's where the compliance comes in. So all of a sudden, which was originally supposed to be a censorship resistance, permissionless, open to the everyday user, as much as like money laundering could consider to be not good or illegal or whatever, this permissionless system is now permissioned. And so that was under the hard censorship scenario. The tweet up there is kind of pointing to that. Yeah. But in reality, it's more of a soft censorship. So it says there...
Pain in the ass, essentially.
Yeah, so let's just make it such a pain in the ass for the average everyday person that they're not going to use it. So when sanctioned transactions would eventually be validated, but it would likely result in long waits and high priority fees, making the user experience substandard. So just because 63% are compliant, that leaves 37 that are uncompliant. So those nodes can still process transactions. You're just going to have to wait a longer time or pay more money. Eventually, it'll get picked up. And also, on the plus side is it's not a total loss, because if more people decide to participate in Ethereum and process transactions, then that means the percentage of compliance falls. But the majority of these nodes are MEV relay flashbots, and that's a minor extractable value. When I talked about the situation where I lost money on a decentralized exchange and my transaction failed, most of those nodes are relay flashbots, and so that's where the flash bots themselves are being compliant because they're the growing percentage of transaction blocks per post. So yeah, that's the current state of Ethereum. And now we'll just kind of sum up the disadvantage.
Yeah. Well, high barrier to entry.
High barrier to entry, which was
Big
once
one.
the low barrier to entry
Yeah.
participation.
Fees have gone up an incredible amount, so from $10 per transaction to about $50. Gas fees are paid to execute smart contracts, with the downside of front-running trades by paying higher gas fees. To compensate for the lack of scaling features at the native blockchain, Layer 2 solutions help provide for advanced scalability and throughput. And we'll break all this down for you. And then their new monetary policy outrightly favors the wealthy class at the expense of the working class. So that's your average person. So it's like we've put how banking works onto the blockchain. It's just an extension of that now.
Yeah, they take the traditional model and they put it onto blockchain, and we're just repeating the same thing with new technology, which is unfortunate.
Yeah.
So yeah, the barrier to entry to be a validator on Ethereum, have your own node and run a validator, you need at least 32 ETH. So right now, 1 ETH is around $1,500 US. So 32 times 1,500, around $50,000 US just to participate. I know that if you wanted to be a bank and run your own bank, obviously it's going to be way more than $50,000. But we're just saying that if you want to participate in a system that could potentially secure freedom, well, this is a very, very high barrier to entry for your average user. Mm-hmm. As Ethereum shifting over to Ethereum 2.0, the 400% increase, of course, this is when Ethereum was up at $4,000 per Ethereum. But again, when we compare it to an e-transfer, it just doesn't make economic sense to the everyday person. And then as I said before, getting front-run, the MEV bots, minor extractable value. So, these algorithms or bots, they're making money for the people that program them. And hats off to the smart programmers that made that happen. But for your everyday user, my experience, it sucked. I don't want to use an exchange that has MEV bots, to be honest.
Absolutely not.
And then the layer 2 solutions. So this is where we're talking about base infrastructure. And there's so many competing blockchains out there. With Ethereum and how they built it, they had to bring on a second layer to increase the scalability, to provide the amount of transactions per second. To speed that up, they needed layer 2 solutions. So the only problem with that, the disadvantage of that, is when you add more layers to the original foundation layer, you're increasing security issues. So more vulnerable to hacks or attacks, something like that. And then, just the way the structure of their monetary policy, it looks like it.
You can make money by having money.
Yeah. You got DeFi, you got all these good things that are new, but unfortunately, the rich get richer.
They do, yeah.
I mean, maybe that'll always be the way it is, but
It's not all bad though, is it?
No, it's not all bad. It's not all bad. There are advantages to Ethereum, right? It was the first smart contract platform. Yeah. So because it's been around the longest, that creates more confidence in the market. There have been big investors putting money into it, which could be seen as a bad thing. But that creates more market confidence. They have the most amount of blockchain developers working with Solidity, the programming language for Ethereum. And then, of course, a lot of these dApps, the first ones out of the gate that have really innovated, disintermediating centralized parties, have been built on Ethereum. And most ICOs have been built on Ethereum. So Ethereum's not going to go away. It might just be kind of one of the bigger dinosaurs that are being interoperable with other blockchains.
I just want to clarify my position on Ethereum having a high barrier to entry and correct myself. To stake on Ethereum 2.0 native base layer, you do need 32 ETH, but you can stake with a lot less using Lido's batch deposit contract. When using the batch deposit contract, you pay a 10% fee, and that's split between Lido's DAO treasury, insurance funds, and Lido's node operators. Simply put, if you don't have 32 ETH, or around $50,000, you are not part of that class, and therefore you are subject to a 10% fee by a middleman intermediary. It's permissionless with a twist. Not all who use Ethereum are treated the same. I called Ethereum a dinosaur, but the truth is that it may actually live up to its promises of 100,000 transactions per second and be more usable than how I have illustrated. Big money is behind Ethereum. Some of those parties are suspect, but if and when Ethereum 2.0 does launch, possibly in March of 2023, it will be the main smart contract Turing complete blockchain that all other blockchains interoperate with. And, in my opinion, this is highly likely.
So it's not going to go away, but it is a consideration of if we want to do an override by the people for the people, build from the ground up, and make something true to its word, and that's generative rather than degenerative. We have to really consider what we're building on.
Mm-hmm.
So,
yeah, and I think just as a final note too, we were talking earlier about the Ethereum Foundation and some potential connections to our direct competition.
Right.
Just kidding.
Right, yeah, well, yeah, who's our direct competition? The mother weapons! So, the original creator of Ethereum, Vitalik Buterin, I know he's part Canadian, but I don't know his story. Maybe he's a stand-up guy, cool guy, nerdy guy, cool guy. Very smart guy. Hats off to you, buddy. But the Ethereum Foundation and the people that run the Ethereum Foundation, it says right on the World Economic Forum's website that the Ethereum Foundation is partnered with the WEF. So that is a problem for project override. So even that one sticking point there, on its face, immediately is like, no thanks, we're not going to participate with Ethereum. But we've just pointed out a bunch of reasons why it's not a one we really want to build on.
No. But it is a trailblazer. It's showing us what's possible.
Exactly.
Right? So there is that. There's nothing inherently wrong with that. And just as a final shout out, if you've made it this far, we have a Telegram group. Come chat with us, ask us questions. We're also on the Canadian platform Liberty. So we'll put links for that in the bio. And then we have one more platform coming up, right?
Yeah, just in terms of project override and having it be a collaborative build out. So we're just laying the foundation and explaining everything through these 12 episodes. So we have a Discord, and that Discord is not accessible right now. We did open it up for the people that participated in some fundraising last year, and we were giving 1,000 override tokens, and those tokens were used as it's called token gating. So to get into the Discord, you would basically interact with a smart contract that verifies you have those 1,000 override tokens, and those are on Ethereum. So it's all set up to do that, but we're not ready to have the full-on collaboration. So as these podcasts come to a close on the 12th episode, we'll be ready for that. And of course, because we're going to be using Verus and stuff, we may just transfer those tokens over to Verus, and that's how you're verified. So we're still following through on the promises there that were made. But yeah, we are as you stated. We have Telegram right now
Yeah.
and these other platforms, and we're going to open up to collaboration in the future.
Yeah, we'd love to hear from you.
Love to hear from you, and look forward to some more specifics about QUORUM in episode 11 and Verus in episode 12.
Right on. Till next time.
Next time.
Project overripe.